Good afternoon. I would like to thank our host for the kind invitation to take part in the World Governance Summit 2024. The world is facing overlapping crises. Developed countries deal with persistent poverty, food insecurity, fragility, conflicts, and the growing existential threat of climate change. This is why the central theme of Invest in the Future, the role of financing for sustainability, and the rise of multilateralism is most timely. The issue of development is crucial for the future of any country to be sustainable and contemplate simultaneously actions against inequalities and climate change. It is important to highlight that international community agree with this in various meetings. For example, the Conference of Parties, the COPs, with their consensus over the SDGs in the Agenda 2030, the adoption of nationally determined contribution under the Paris Agreement. More recently, COP28 here in Dubai and also G20 in India stressed the importance to increase the level of financial resources in an effective, timely, and easily accessible manner as a condition to overcome these challenges. The overlapping crises we face require to understand the trends and the facts that could impact our capacity to access sufficient financial resources to overcome inequalities and prevent the rise of temperature over 1.5 degrees. In this sense, we need to take note that the globalization drive with the internalization of trade and finance lost momentum as far back as the 28-29 crisis. And since then, protectionism was strongly introduced in international trade. Geopolitical conflicts, in turn, have created uncertainty and instability with the indiscriminate use of sanctions. In addition, the disruption of global trade chains was intensified as a result of COVID-19 and the coupling and the risky policies that are still in practice. The very dynamics of globalization, however, although more fragile, combined with all that issues that I mentioned before, has given rise to a counter-movement, producing a deep interdependence among economies and regions of the so-called the Global South. We are talking about an increase in international trade among the emerging markets and developed countries, opening the way for the emergence of a more multilateral and financial order, deepening the density of global value chains. While the great emerging economies in Asia, Latin America, and Middle East have seen the multiplication of capital flows in their direction. As an example, let's look at the BRICS. The power of the BRICS countries has indeed grown rapidly, which is a good base for understanding the force that support multilateralism. Measured by purchasing power parity, the BRICS countries already account for 31.5% of the global GDP, surpassing the G7's, which has 30.8%. According to IMF, by 2028, the BRICS countries will account for between 35 to 40% of the global GDP, while the G7's share will drop to 27.8%. Even with difficulties related to the unfair international financial order and the great indebtedness of developed countries, the figures of the International Monetary Fund are good illustration of this new trend. The share of emerging markets in developed countries in global trade raised from 37% in 2016 to achieve 41% in 2022. In contrast, advanced economies has been losing their participation in global trade, decreasing from 62% to 58% in 2022. So, in recent times, the globalization is increasingly become more multilateral, strongly expanding between emerging economies and developing markets. Despite of the coupling and the risking policies, disconnected the markets has become more difficult. Multilateralism is a symptom of the emergence of the Global South new players. Yet, the emergence of this named Global South has to coexist with imbalances, asymmetries, and unfairness in trade and finance of the international order. The issue of finance, economic, social development, and actions on climate change urgent demands structural changes in the international financial architecture that we make possible to channel the available liquidity, the international liquidity, in such a way as to enable finance both on the scale and under the conditions required by developed countries and emerging economies. For many decades, the world adopted a single international reserve currency, which has given rise to an asymmetric and unfair financial system that has always generated great advantages for the countries issuing that currency and huge penalties and indebtedness to the countries that have no convertible currency, like the countries of the Global South, mainly the low and middle income countries. Yet, the recent trends in international trade above mentioned and the reaction to geopolitical conflict point out that the financial and monetary system are suffering an ongoing process of adjustments. Everything indicates that two scenarios are clear unlikely. The first one, the emergence of an alternative hegemonic currency to replace the dollar-based monetary system with another cent currency, is unlikely. The second, the creation of a global currency, like as Keynes wanted, the Bancor, because then, as now, the necessary condition to sustain such a currency, that is, global geopolitical unity, doesn't exist. The most likely outcome is the emergence of a new monetary system better adapted and more multipolar, resulting from some factors. First, from the steady tendency towards growing bilateral trade, which gives rise to increased returns of scale in the use of their respective currencies, the local currency, to the detriment of those obtained with another currencies. Second, from the deepening of the local capital markets in emerging economies and the trend to have a hedge against the volatility in interest rates and exchange rates. In developed countries, that is the issuance of bonds in local currency also. Another possibility is the CBDC, central bank digital currency, that could promote the central banks of emerging market and developed countries as a clearing house. So the predominance of one single currency will diminish further, make the global monetary system more diverse and multipolar, with the currencies of major developing countries and regional markets gain in importance, without any adjustment that is not necessary. What is at stake today in finance sustainability is the fact that the countries most affected by the consequences of climate change and inequalities are the countries with less access to financial resources to face it. They are the least developed countries. Not mention that these countries are also the most indebted ones. According to the United Nations, 1/3 of all developing countries and 2/3 of poor countries have a high level of indebtedness, which is due to the asymmetrical architecture of the current financial system. If we don't tackle the burden of indebtedness of these countries, it is impossible to solve the problem of finance them. Besides that, when they have access to financing, they pay much higher interest rates compared to the rates of developed countries. The current architecture should change to channel the available liquidity, international liquidity, to enable finance on the scale and under the conditions required by the Global South. This is essential to achieve the SDGs, the compromise of countries' climate objectives signed in the Paris Agreement, and fundamentally to development. The G20 Independent Expert Group reasoned that emerging markets and developing countries need an additional investment of about $3 trillion US dollars. For that, they need to receive investment from all the financial players in the world. Certainly, multilateral development banks have a role to play, but this role is just complementary. And in the Article 2.1, item C of the Paris Agreement is clearly stated that governments have to make financial flows consistent with a pathway towards low greenhouse gas emission and climate-resilient development. Multilateral financial platforms such as the NDB, the Bank of BRICS, can improve the capacity of their member countries to face the challenge to accomplish their NDCs, or nationally determined contributions, assuming in Paris Agreement. Even so, there is a huge amount of resource that is necessary and must come from the developed economies and also in some proportion from new emerging markets. In this new architecture, MDBs have a crucial role to play by promoting long-term financing, be it in dollar, be it in local currency, boosting economic growth and leading to greater opportunities for employment and income, and financing new technologies and innovations that is crucial for the development of emerging markets. So, some of the measures NDB, the Bank of BRICS, can take to support their member countries include: first of all, financing development projects in local currency to reduce dependence on foreign currency, while maintaining financing in convertible currencies in a basket of options. 2, provide guarantees and insurance to help attract private investors and reduce the perception of risk associated with this type of financing and the high cost of hedging them. 3, providing technical assistance and support, project preparation, and financial modeling. 4, establishing strategic partnership with local governments, private sector, and other developed banks in the form of co-financing to provide local currency financing and the great currencies also. To this end, NDB has the strategy of broadening its base by developing capital markets in the local currencies of its member countries, issuing bonds in different markets and currencies, and also expand its capital base by attracting other countries of the Global South to be partners and shareholders. When dealing with goals of this magnitude, it is clear that only a multilateral vision and action can make the difference and not leave any country behind. For that, it is essential to restore an effective coordination role of the United Nations and reform the Bretton Woods institution to play a key and strategic role. The NDB the Bank of BRICS, is ready to join hands with all countries in the world, multilateral development banks, international institutions, and other stakeholders, in order to work together addressing development challenges, provide avenues for the global south to access finance for development that must be sustainable, inclusive, and resilient. And it is important to reiterate that it is necessary a joint effort to reduce the reliance on established and limited traditional financial practices and create architecture that could provide effectively, timely, easy, accessible, and fair financial process. Peace, cooperation, and dialogue are essential for multilateralism and financial sustainability. I wish all a very fruitful and productive summit. Thank you very much.